Good morning, traders. Welcome to another edition of Technical Talk. Today is Monday and time is now 7:28 a.m. GMT. My name's Aaron Hill, and the latest news, of course, continues to focus on the geopolitical tensions surrounding Russia and the Ukraine. But latest news, according to an FT article, Vladimir Putin and U.S. President Joe Biden have accepted in principle of a summit to ease the tensions over Ukraine. You know, the possibility of a meeting between these two leaders clearly will ease tensions, as we are seeing in the markets right now, with risk assets largely bid at the moment. Obviously, these concerns were the concerns of an invasion were heightened over the weekend, as I'm sure most of you are aware, when Belarus said that 30,000 Russian troops were participating in joint drills. And there's more than 190,000 troops now on Ukraine's border, including those participating in Belarus's in the Belarus drills. So look, as I said, this is a report according to the FT, but risk markets, as you can see here, are firmly bid this morning. As you can see, the US equity index futures are higher across the board. Dow Jones futures are up by 1% now. S&P futures up also by 1%. Look, we're higher by 1% across the board here. This could translate to a higher open on the European equity cash market in around 30 minutes. So do be aware of that. In Asia overnight, we did close reasonably mixed. With the Nikkei 225 out of Japan closed down by 0.8%. The South Korea's Kospi was unchanged at the close, but the Australia's ASX 200 ended higher by 0.2%. Now, in terms of other risk assets, we can see that the Aussie dollar is higher across the board, with the Australian dollar against the US dollar currently trading at 72.21, up by spot 7% in early trading. As well, in line with this, we're also seeing New Zealand dollar pairs higher across the board as well. The New Zealand dollar against the US dollar is currently trading at 67.24, up by 0.4%. This, as you may imagine, safe haven markets are lower across the board. This includes gold as well. Gold is lower right now. Yes, so look, just a quick look at the major markets. As you can see, the dollar yen is unchanged currently. Dollar CAD is slightly lower by 0.2%, as is the dollar Swiss. Now, moving over to the economic calendar for today, we do have, just bear with me, we do have France, German, Eurozone, and UK flash manufacturing and services PMIs to look forward to in, as you can see, less than an hour for the French manufacturing PMIs, as well as the German manufacturing and services PMIs. We also have the Eurozone. As you can see, Eurozone manufacturing PMIs at 9 a.m. today. These are all GMT times, guys. And this follows also, we also have the UK's flash manufacturing PMIs and services PMIs at 9:30 this morning. So these are events that you should be watching closely. Now, as for also just as a friendly reminder, the United States, the US banks are closed in observance of President's Day today. So you may see liquidity thin out as we head into US hours today. In terms of Tuesday, I'm not going to go through the whole calendar because that's available on our website. But in terms of Tuesday, we have German IFO Business Climate Index to look forward to. Again, this is a high volatility expected. This is a potentially high impact event at 9 a.m. We also have, I believe, US flash manufacturing PMIs and services PMIs at 2:45 on Tuesday. Again, guys, these are GMT times. And finally, we have the US consumer confidence. That's the CB consumer confidence, and that comes in at 3 p.m. Now, shifting over to the charts on the euro dollar, as you can see, we are higher at the moment. We are higher by 0.5%. Now, in terms of the longer term picture, we are coming off this resistance area on the weekly time frame at 1473. So this has remained unchanged since the beginning of the year, and trend remains clearly to the downside. So we are still looking at a bearish picture for the euro dollar in terms of the a longer term view. With regards to the daily time frame, we are, look, for anyone that's watching, reading the market analysis put out by me and the team, you will note we are seeing conflicting reports from the daily time frame, which broke through a trend line resistance, and has recently been retested. Now, the key watch here is the 14th of January high at 1483. Now, with that being said, if we break above this 1483 high, then this would offer added confidence that we are headed high. The Europe shared currency is likely headed higher against its US counterpart. And obviously, this would conflict against the weekly timeframes picture. Now, if we do break above 1483, do keep an eye on the 200-day simple moving average currently at 1637. And this is closely shadowed by a Quasimodo resistance at 1667. So this is the picture we're seeing right now on the higher timeframes. Now, also do note that on the relative strength index, the RSI, we are bouncing from the 50 center line. Now, what this tells investors, what this tells longer term players, is that average gains are currently exceeding average losses. Now, only marginally at the moment, but we are seeing, and this really equates to positive momentum for the time being. To bear in mind, we also have indicator resistance at 63.66. Right, on to the H4. This is the H4 time frame. This is the H1 time frame. As you can see, we are powering ahead on the H1 time frame, bound for the 114 figure. Now, which is enclosed, I must say, by a supply zone at 1407, 1386, which, as you can see, did serve the market very well last week. Now, should we overthrow these noted structures, do be aware we could be heading for this Quasimodo resistance at 1481. But before we do head for that area, we have to take into consideration we are looking at a H4 Quasimodo resistance at 1448, which comes in around 1448. Which comes in around this point here. So any breakout buyers above 114 should take into consideration this H4 Quasimodo resistance. Now, just as a quick observation here, guys, for anyone that follows harmonic trading, we do have a potential harmonic AB equals CD configuration in the offing. Now, for anyone that follows harmonic trading, the AB equals CD is the most basic, is the most simplistic formation within the harmonic family, if you will. So, look, we could be if we do break the 114 handle to the upside. Do bear in mind we do have an AB equals CD termination point around 1.1430. So this could see a reaction. Now, for anyone that really enjoys harmonics, you may even note we have a potential AB equals CD alternate formation from the 1.272% Fibonacci projection at 1461. Now, this lines up pretty much, reasonably closely to both the H1 Quasimodo resistance at 1481 and also the H4 Quasimodo resistance at 1448. So do be aware of this. Do be aware of these two levels. Should we break above 114, the AB equals CD equivalent position around 1430, and the AB equals CD alternate AB equals CD formation around the 1460 area. Now, clicking over to the Aussie US dollar. As I've already said, risk currencies are higher. As you can see, we are now 0.6% in the green for the Aussie dollar. Now, this look as we head into the London session in about 20 minutes, the cash market opens. And we could see further volatility added to this market. So we could see a continuation to the upside. Now, in terms of support and resistance, we can see the prime support on the weekly time frame remains in the fight, despite failing to ignite much bullish enthusiasm since late 2021. What this tells me is, alongside the trend, the overall trend pointing to the downside, this is a weak area. Prime support is a weak area, despite bulls trying to make an effort to hold things together. Now, with that being said, I am looking at this resistance area here on the daily time frame, and this is composed of a 200-day simple moving average, which currently trades at 73.44, a trend line resistance, which is taken from the high 78.91, and also a Quasimodo resistance at 72.78. As I've marked within this red zone, I do expect some form of bearish reaction here to play out in line with the bearish picture seen on the weekly time frame. So do be aware of this. Now, going against not really going against, but we may see a continuation higher on the RSI until reaching overbought levels. We do have modest resistance coming in around this point here, around the 60-ish area, and may even converge with this resistance here. So do be aware of that. Let me just put that on the indicator so we're all aware. So around the 59-ish region, we do have resistance in play. So if we break above this resistance, we could be looking at overbought conditions on the daily time frame. Now, in terms of the shorter term markets, we have cracked above the 72 handle this morning and are on the doorstep of a trend line support turned resistance, taken from the low of around 69.ish. So with that being said, we could be testing this trend line resistance in the near future, followed by a possible test of the Quasimodo resistance at 72.57. And again, guys, this is the H1 time frame. Now, this Quasimodo resistance, interestingly, is positioned within this harmonic bat pattern PRZ between 72.74, 72.41. Now, I consider this a used harmonic pattern now, because we did get a test. I think it was last Thursday or the week. I cannot remember the day. 10th of February. What are we in now? So I think it was the prior week's Thursday of the prior week. So it's the 10th of February, and we tested this area in strong fashion, and we eclipsed the 38.2% Fibonacci retracement from legs A to D, and we came within a whisker of hitting the 61.8%. Fibonacci retracement of legs A to D. These are common take profit targets for harmonic traders, and as you can see, we have turned higher since missing this. So a test of this area, it may draw additional bearish attention, but I consider this a used harmonic pattern now. If we do level off around this area, as you can see, I've noted that we do have a possible AB equals CD formation to the downside, which aligns almost perfectly with the 61.8% taken from this harmonic bat pattern. Okay, on to the dollar yen. Now, you may remember, for those who follow the daily market commentary, this is a strongly harmonic market right now. We had an AB equals CD to the upside on the H4 time frame, which dovetailed almost to the pip with the daily Quasimodo resistance at 116.33. As you can see, we had a beautiful reaction from this area. What's also nice is the reaction is forming its very own AB equals CD formation to the downside. So we have a potential bullish AB equals CD formation, which aligns with a 61.8% Fibonacci retracement ratio of 114.57. Now, what's interesting is where this AB equals CD terminates, the downside, the bullish formation, it terminates at the 61.8% Fibonacci ratio of this AB equals CD. So we've taken it from this leg A to this, to this leg D, and this offers us a final take profit target for the larger ABCD formation, and also an area of support to bounce high. So if we do reach this area, traders are, we could see a floor, buyers attempt to come in from this area. Now, the bearish position is of course strengthened by the recent test of the trendline support term resistance at this point here, and this is taken from the low of around 113.50-ish. With the test of this area and the H1 time frame, as you can see, crawling below the, not crawling, actually penetrated the 115 level to the downside, we could be looking at a test of this Quasimodo support at 114.82. But with this level already being tested, it's potentially fragile and could lead us all the way down to support at 114.42, which conveniently aligns very closely with the 61.8% Fibonacci ratio on the H4 timeframe. And this is the area I'm really looking at. So between the support, H1 support at 114.42 and the H4 61.8% Fibonacci ratio at 114.57. So this is a potential downside objective for anyone, for traders short this market, especially those short the trend line support breach, and also a potential support for buying opportunities. Okay, on to gold. We have some interesting price action here. We have a symmetrical triangle recently formed, and gold has been on a tear for the past 3 weeks. Obviously, finding a bid for a safe haven bid on the back of tensions out of Russia and the Ukraine. So with that, we've broken forcefully above this symmetrical triangle to the upside. And with that, we also, if you can see here, we did retest the boundary as support. Now, whether this pattern comes to fruition and the profit objective is measured from the base, so the high of the formation to the lowest low of the formation, and that's extended from the breakout point, and this comes in around a whopping, this is an all-time high of 2095. So if we do continue higher, this is a possible profit objective. I'm not saying we are going to reach here, but it's a profit objective to be mindful of. Also, just to be aware, we are above the 50-day. We are firmly above both the 50-day SMA and the 200-day SMA as we currently trade. Now, the 50-day SMA did offer support, a dynamic support at this point here, just to be aware of, and this currently trades at 1804. Now, in terms of the H1 timeframe, again, back onto the harmonics, we have a clear harmonic bearish picture forming, despite the breakout of the daily triangle. So as you can see, we have more of a longer term AB equals CD equivalent pattern. And this is marked by the 100% Fibonacci projection at 1908. As you can see, so it's from this point to ABCD. But in addition to this, we also have an AB equals CD alternate AB equals CD formation. And this is defined by the 1.272% Fibonacci projection, again at 1908. And we have seen a rejection from this region in recent hours. Now, for those who follow the traditional take profit targets, we could, the initial profit objective falls in, let me just, falls, I think I already had that marked on the chart. I did. Sorry, guys. Yeah, so the initial profit objective for this pull, say retracement, I guess you could say, the reversal seen here is down all the way down at 1848. Whether we reach this or not is difficult to say given the tensions at the moment, but the safe haven markets are currently offered, are currently weighed according to the risk appetite, as I already alluded to. So if that continues to be the case, we could be seeing a drop all the way down to the 38.2% Fibonacci retracement ratio. Now, if we do eclipse this area, then we could be looking at another profit objective around the 1812 area. Now, this is quite a considerable dip on the gold, and I'm not saying we are going to reach these areas, but this is according to the technical analysis pattern structure. These are potential targets. Let me just see where the 38.2% of the equivalent AB equals CD comes in. So, okay, so we have the 38.2% just below so we have two 38.2% Fibonacci retracement ratios to be aware of. So we have one at 1848 and one at 1837. So between this area here is the initial take profit target, followed by another secondary profit target of around this area here. Now, these are just according to this pattern structure. Okay, finally on to Bitcoin. We have crunch below support at daily support at 39,720 in recent trading, and we are pulling back. We are currently up by 2.5% as of this video. Now, if we do react off of this resistance, do be aware we have a prime support. It's a rather small area at 36,942, 37,379. Now, should we reach this area, I do expect some form of a bounce to emerge here. But you know, in technical analysis, nothing is ever guaranteed, of course, but this is a prime support and could see buyers attempt to form a floor. So just be aware of these two areas at this point here. Now, onto the H1 time frame, we are bouncing from a decision point at 37,290, 38,252. Now, this just missed the 1.618% Fibonacci projection at 37,813. This is, as you can see, this is housed within this decision point. Now, should we continue to bounce higher from here? We do have some supply, moderate supply at this point here, but nothing that I would really get excited about. However, don't forget, we do have daily resistance at this point here, 39,720. Should we overcome this, then I am looking at this Quasimodo support term resistance at 41,347 as a potential upside objective. Okay, guys, so this is it from my side. Thanks so much for joining. Have a fantastic week ahead. Look, any comments or suggestions, please do forward them to either market analyst at fpmarkets.com, or alternatively, send your suggestions or comments to the support team at support@fpmarkets.com. Look, guys, have a wonderful week ahead, as I've already said, and I'll catch you bright and early on Friday. Thanks so much, guys.